Federal Reserve Chair Jerome Powell has found himself at the center of an unprecedented legal and political controversy as the U.S. Department of Justice has launched a criminal investigation involving his conduct. This unusual development, which includes the issuance of grand jury subpoenas and the threat of criminal charges, has sent shockwaves through Washington, Wall Street, and across the global financial community, raising serious questions about the independence of the Federal Reserve and its ability to operate free from political pressure. The investigation focuses on Powell's testimony before Congress last year and a major renovation project at the Federal Reserve's headquarters in Washington, D.C., a reconstruction effort costing billions of dollars that has drawn scrutiny from lawmakers and critics alike. Federal prosecutors are examining whether Powell provided misleading or inaccurate statements during that testimony, and whether the public disclosures about the renovation scope and costs were fully transparent. The Department of Justice has served subpoenas to the Fed and has warned that criminal indictment is a possibility if the inquiry produces sufficient evidence. In response to the announcement, Powell issued a rare public statement addressing the probe. He expressed strong respect for the rule of law, but characterized the investigation as part of a broader campaign of political pressure rather than legitimate oversight. Powell argued that the focus on his testimony or the renovation project itself was a pretext, asserting that the real source of conflict lies in a long-running dispute with the executive branch over monetary policy, particularly interest rates. According to Powell, the threat of criminal charges is essentially linked to disagreements between the Fed and the White House over how interest rates should be set. He maintained that the central bank's decisions were driven by economic data and long-term stability goals rather than political considerations, and that attempts to influence monetary policy through legal threats undermine the institution's long-held independence. In his remarks, he stressed that the Fed must be free to make decisions based on economic conditions, not political preference or coercion. The controversy has its roots in the broader tension between Powell and other branches of government. President Donald Trump, who appointed Powell but has since become critical of his leadership, has publicly pressured the Fed to lower interest rates more aggressively than Powell and his colleagues have deemed appropriate. Those disagreements have played out in public forums, including social media and speeches, and have culminated in efforts by some political figures to challenge Powell's leadership and that of other Federal Reserve governors. The legal action involving grand jury subpoenas signals a dramatic escalation. Subpoenas carry the threat of testimony under oath and the production of documents that may be used to assess whether criminal charges are warranted. While no formal charges have yet been filed, the mere possibility has ignited debate over the rule of law, the role of the central bank, and the limits of political influence on independent institutions. The reaction from financial markets was swift. Investors expressed increased uncertainty, with stocks and the dollar showing heightened volatility as traders weighed the implications of this extraordinary situation. At the same time, gold prices rose sharply as a traditional hedge against political and economic instability, reflecting widespread concern about what Powell's legal troubles might mean for monetary policy and economic confidence. Critics of the investigation argue that it represents a dangerous precedent, potentially jeopardizing the Federal Reserve's ability to make difficult economic decisions without fear of political retribution. Supporters of the probe contend that transparency and accountability are essential, especially when billions of dollars of public or quasi-public funds and responsibilities are involved. The debate is likely to intensify as the inquiry progresses, and its outcome could have lasting effects on the credibility and independence of the U.S. central bank.